Continuing the coverage of this pandemic, it's important to remember one of the major rules to follow when trying to contain the coronavirus outbreak, and that's social distancing. So as a result, we don't have a market analyst in the studio this week, but we did reach out to a few of our regular analysts to get their thoughts on COVID-19, otherwise known as the coronavirus. As of this taping, the number of global cases has surpassed 215,000, including more than 9,000 fatalities. We asked our analysts how this is impacting agriculture and the world at large from a health, economic, and social standpoint. Darren Newsom, president of Darren Newsom Analysts, told me, quote, "The investment side of any market hates uncertainty, and if nothing else, the coronavirus has created incredible uncertainty. Probably the greatest influence of investor uncertainty has played out in the livestock industry. Yes, supplies remain big, but demand is strong. Yet futures of live cattle, lean hogs, and feeder cattle have collapsed on spillover pressure from the meltdown in U.S. stock markets. Grain and oilseed markets are lower, but there are other real fundamentals at play as part of the sell-off, most notably the complete lack of export demand for U.S. soybeans." Next up, UNL livestock economist Elliot Dennis wrote, "The media and market attention surrounding coronavirus has been near deafening. Uncertainty surrounding the severity, transmission rates, case fatality, and government policies has induced large amounts of volatility into the markets. Beef is currently wading through how COVID-19 will impact domestic and export demand. Given that beef demand has a large market penetration in food service and roughly half of total U.S. food expenditures is consumed away from home, there is likely to be some decrease in domestic beef demand." Author and analyst Elaine Cubb told me, quote, "Agricultural commodities should, in theory, have more resilient prices during this scenario because, as they say, people gotta eat. Consider the cognitive dissonance of seeing grocery store shelves completely cleaned out of beef, and yet we're still seeing live cattle futures down 28% since mid-January and April feeder cattle prices at $108 per hundredweight. In my opinion, there are buying opportunities for the few traders willing to take on risky positions right now, but I also caution ag producers from too much bullishness. Some real demand destruction has occurred during the global COVID-19 outbreak, from less soybean meal demanded in China after herd culls, and even in the U.S., where the lost travel and conferences and restaurant meals won't ever really be made up. Our economy won't get double the conferences, meetings, concerts, sports tournaments, etc. in May to make up for the canceled ones in April." Also, Luke Beckman with Central Valley Ag Co-op said, "This week I am reminded of the cycles of market emotion chart that I'm certain many people have seen before. Fear and panic are the prevailing emotions right now, and that is spilling over into our ag space. It's hard to act when prices are below break even, but one area of opportunity exists in the deferred corn market. If you have very little sold for the 2021 crop and can store your crop at home, some premium-based contracts can still net futures prices in the upper $3. Proper management of those contracts can yield cash prices north of $3.70 a year from now. That's a base hit at this stage of the game and prudent amidst the uncertainty. This too shall pass." And finally, Darren Fessler, our analyst from Lakefront Futures, told me, "The concern over the coronavirus comes from how contagious it is, which is a concern for our health systems. In turn, the panic is having major impacts on a financial standpoint. We see grocery stores clearing out of essentials, especially meat. The demand for beef is like something I've never seen before. Packers can't keep up. Demand's strong, but prices don't reflect it, and to me, smells fishy. The overall situation may get worse before it gets better, but I believe there will be tremendous pent-up demand when it's all over."